market analysis perspective on behalf of CFDs.com, acting as an analyst on their behalf, bringing you a review of today's price action. Okay, right, so let's try and summarize the actual price action today. First of all, from a fundamental perspective, we started off with the Asian markets, as we always do, given the three different time zones. Okay, so the bias overnight was negative, given the fact that US markets had obviously sold off quite substantially. Okay, and the Asian markets overnight were more or less flat, with the Nikkei flat and the Hang Seng negative, and we had the Shanghai managing to hang on to gains up by 0.6%. Okay, although the rest of Asia was certainly under pressure. Okay, add in the fact that we had the uncertainty regarding Greece, also obviously the risk-off scenario from Spain, given the fact that the IBEX had been under pressure. Okay, and that's the bias that we obviously had going into the actual morning. Now, with regards to the economic data that was released, we had German consumer confidence come out slightly better than expected, although the French data was worse than expected, so there was a negative surprise there. Okay, we had Australian Aussie data out overnight, nothing really of any importance other than the fact that the dollar obviously had continued to appreciate, given the fact that the interpretation thus far has been of one of a hawkish nature. Now I can bring up a chart of the US dollar for you and certainly elaborate. Bear with me. I mean, just looking at the chart of the Aussie USD, you can certainly see from there. I mean, you had certainly immense pressure on the actual Aussie, immense pressure on the Kiwi as well, as you can see here. Certainly under pressure and failing to move higher. Also, you can look at the chart of the Euro USD as well, and you can certainly see an exerted pressure there as well. I mean, you can look at the chart of GBP USD. Sterling, again, that's also under pressure. So the overriding theme has been a strong dollar, and a strong dollar obviously is negative for the FTSE 100, given the fact that it puts pressure on commodities. Okay, now we've also had the oil Brent obviously making a new low as we speak. We also have copper obviously pushing lower as we speak as well. Copper price has been under pressure regardless of the short squeeze rally, which I'll certainly elaborate and explain as to what happened there with regards to the rally in Europe. Okay, so certainly negative from that perspective. Okay, let's just bring up the chart of the Euro USD as well, so we can elaborate upon that. Euro USD, as you can see here, certainly immense pressure until we had the news of this so-called, or potential news of a Greece resolution, although it has been denied now, which I'll elaborate on. Just trying to give you the chronology of events thus far. Okay, so bringing up a 60-minute chart of the US dollar, as you can see, certainly a push higher. Okay, so impressive move higher on the dollar index. Okay, so the market was negative going into the morning, given the fact that Asian markets were obviously pretty flat, potentially negative, given the fact that US markets were negative, and we had this overriding concern. Number one, obviously hawkish Yellen interest rate rise there being a concern. Then we had concerns from Spain, and we had concerns with regards to Greece. Okay, and they certainly seem to be a triple whammy. Okay, so the markets then started to short squeeze higher in Europe. If I bring up a chart of the German DAX and certainly give you an insight with regards to that, you can see here the markets started off higher, held previous support equals resistance, sold off, closed the gap, retested yesterday's lows until the markets obviously coiled, and so-called news broke, whether or not it's false or not. I mean, it has been denied now with the latest tweet at present, which I have retweeted. German government official surprised by earlier Greek reports that progress has been made, so therefore there's been no progress whatsoever. So the markets obviously had short squeezed on this so-called progress. As you can see here, we had this potential symmetrical wedge pattern. We were in this bearish pattern. We retested the pivot low from yesterday, and the market's obviously short squeezed in anticipation and expectation of a so-called deal with regards to Greece, and there is none. Okay, there is none. So therefore we're back into this risk-off scenario. Okay, so with regards to Greece now, you do have previous support equal resistance in this region, but that's not going to hold for now. The 1178, 11800 region on the German DAX obviously will be acting as resistance. If you go to the daily chart, you can see as well it's an inside bar on the German DAX on the daily chart. Okay, So regardless of the actual move higher today, the thrust higher today, it is an inside bar, so therefore that will be what would certainly take a bearish bias. Okay, that would certainly be a bearish bias regardless. Okay, so given the fact also the news has been rejected, again it's a concern if you are in the bull camp. Okay, so if I bring up a chart of the French CAC now from a technical perspective. Okay, so if you go to a daily chart of the French CAC, okay, so we still are holding into this fib 75% region, so we do need the CAC to hold this fib 75%. If it does negate the fib 75%, then obviously the H&S formation has been negated, and therefore we are going to potentially move higher, given the fact that the Courier and ECB, obviously Mr. Draghi and Neuer, obviously talking up QE front loaded, etc. That certainly could be the case, and also given the fact that French GDP did come out slightly better than expected, that could also be the case as well. But having said that, we have to remain open-minded, and certainly I am going to be very flexible with regards to both directions in the market. Now, I did highlight the fact that we had this H&S formation on the French CAC. Obviously that's failed now. Okay, so it's a short squeeze has ensued. Okay, so in anticipation of this Greek deal. Now, there is no Greek deal, nothing's been confirmed with regards to this Greek deal, so therefore that could be a failed pattern as well. Okay, so a potential move higher that has no fundamental backing, again, is always vulnerable to a reversal in the opposite direction. Now, we do have this obviously diagonal trendline resistance at the pivot high of 5192, so 5192 certainly will act as resistance with regards to the French CAC. Okay, so certainly observe that 5192 level. We do have this megaphone type pattern, a widening, expanding triangle. Okay, so again, this is a bearish potential signal. This is something that we certainly need to be aware of. Okay, given the fact that we have this unfilled gap below as well, that will certainly act as a magnet. Okay, with regards to resistance on the French CAC. Okay, so if the market does push higher on the French CAC, the next resistance level we do have is 52220 region. Then you have another one which is at this 5240 region, and then obviously higher above at this 5270 region with regards to the French CAC. Okay, but again, very impressive. I was actually stopped out on the French CAC today, minus 30. Okay, I have actually subsequently reshorted it. Okay, so I am looking to obviously look for potential move lower, and obviously this gap below as well. Okay, so therefore bearish bias from that perspective. Okay, now the Euro stocks. If I bring up the Euro stocks before I move on to the FTSE, given the fact that these are the important indices in this European area. Okay, so again, we are into resistance on a 10-minute chart. We've obviously broke out of this downtrend here. This didn't last long. Again, the catalyst, or the fundamental catalyst of this market breaking that downtrend is certainly suspicious. Okay, so given the fact that it has been rejected by the German government, I would certainly be very circumspect. Let's just say that. Okay, so again, you have this unfilled gap below at 3640. So again, that will act as a magnet, and we are into horizontal resistance at this 3680 level. 60-minute chart of the Euro stocks. Obviously, we've broken this key trendline resistance, which I did expect to hold. Given the fact that we've broken it based on a false concept, again, it's something that will certainly be called into question. Again, we have the unfilled gap below, so that's something that we watch out and observe for. Daily chart of the Euro stocks. Again, we are into this diagonal trendline resistance, so we are almost holding it. We are back into that 50 MA resistance as well. Obviously, if that breaks, the next level 3750 and 3800 will come very easily. Okay, with regards to the European markets. Okay, with regards to the European markets and the resistance there. Now, the FTSE 100. Let's bring up the chart of the FTSE 100 and give you an insight. Okay, so the FTSE 100, to start off with the daily chart first and foremost. Okay, so we had a bullish engulfing candle. We negated yesterday's move, which is pretty impressive. Again, hats off to that move. That's something that I didn't expect or didn't anticipate to happen, given the fact that the oil price obviously is making a new low, and the copper price certainly under pressure, and given the fact that Asia was more or less flat overnight. But for now, this diagonal trendline resistance is solid resistance, and that I do expect to hold going into tomorrow. Again, the markets are king, and they will dictate, and obviously move whichever direction they choose. Again, it's our job to be flexible and open-minded. So the daily chart itself is into this symmetrical wedge type pattern. Again, it is coiling, so which way it moves or which way it breaks out is going to be very interesting going forward. Okay, so we had this H&S formation. We were expected to hold or retest this neckline. I did have a trade on today. I was stopped out on this FTSE short based on this H&S neckline retest. We even broke out of this resistance level, which was pretty impressive at 7010, and the market continued its thrust higher. We very easily broke out of this concept of lower lows and lower highs, as you can see here. Again, one of the reasons why I wanted to short the FTSE and obviously look for a potential move lower down to the 6900 region is because of lower lows and lower highs. Okay, and that obviously hasn't been the case. Hence, the bias, or attempting to read this bias in the market, is very, very tricky, given the fact that the markets are moving based on Greece or potential Greek news. Okay, so we had this rising, contracting or wedge pattern, and we have obviously retested that now. We've retested it here, we tested it here, we tested it here, we tested it here. So here, 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 here. So when the market generally tends to break that trend line, previous resistance equals support, or previous support equals resistance. Okay, and this is exactly where we find ourselves at this current juncture. Now I can take this pivot high from here, connect it to this pivot high, and abracadabra. Okay, it gives us exactly the actual key trend line. I'm going to destroy, but eradicate or get rid of this H&S because even the fact that it's been negated, this diagonal, the horizontal line as well, and this diagonal trend line here as well. But for now, previous support equals resistance, bang, diagonal trend line resistance, solid diagonal trend line resistance from the FTSE's perspective. So this region here at 7053, 7055, solid resistance. Very, very hard, or very unlikely from my perspective to actually be breached. If it does be if it is breached, then obviously we need to be flexible, and the market's next move or potential short squeeze higher will be into the 7060, 7085, and then obviously potentially higher back to the 7120. Now we did have the Queen's speech in the UK. Whether or not that moved the markets, given the fact that she did talk about the referendum early 2017, latter 2016. Whether or not the market wants to factor that into the equation, again, nothing as of note so far. So given the fact that the dollar is certainly moving higher or pushing higher, and that's negative for commodities, the Aussie and Kiwi certainly is unable to find a base. Again, that's potentially negative for the FTSE 100. And given the fact that US markets are back into resistance, European markets certainly look vulnerable. It's all about Greece at this very juncture. Whichever way Greece moves, the European markets will move because of the sentiment and the bias that's attached to that. Okay, the copper price and oil price certainly is continuing to fall, and the scenario or sentiment from my perspective at this current juncture certainly looks bearish. But again, the market is king and it will dictate which way it moves. Okay, our job is just to analyze and attempt to assess from that perspective. Again, as you can see here, oil fails to hold support. And given the fact that European equities have moved higher, oil prices have not moved higher, so therefore European equity rally is certainly circumspect, given the fact that the Germans have rejected any potential progress on the Greece situation. Okay, folks, so that's a wrap on behalf of CFDs.com. Okay, certainly visit the website, have a look at their trading platform. Very impressive, very reliable. Okay, and I am acting as an analyst on behalf of CFDs.com. Goodbye now.